Here we have a decisional and an extreme point of interest. So now we can see a return, price will take the inducement, mitigate the decisional, and continue bearish. Or price may violate the decisional, possibly with just a week to sweep the high, because there is an extreme here, and then price will continue bearish to the downside. Here we have a structure to the upside. Price drop. We want to see price create the external range or the external liquidity or the external swing high, and I want to see that swing high seek an internal liquidity. Now we have price created a swing high, price return took out the swing low, the drawn liquidity to the downside. Now we have price created this ranged condition, and we have this fall of price to the downside that took out this relatively equal lows. When we have this price delivery to the upside, and then we have price pushed, and then we have the fall of price to the downside. Here you have the order flow, the last sell move before the bullish move that broke structure. You shouldn't look forward to take entry here. This is a more stronger zone because this low took out liquidity here and then sponsored the bullish move. This is an ideal point of interest to consider because the point of interest here have taken out liquidity. This is just an inducement. You could see an order block there, yes, but it is just an inducement, and price may react at the order block, and then before you'd see or no, you would see that price would dump into the ideal point of interest. This becomes our extreme point of interest because what we can see is, okay, this return have mitigated this order block. We can't find fair value gaps here. All these candles have mitigated each order. Here's where we have the last down close candle and the bullish movement further to the upside. So here is where we have the break of structure. And at the zone of the broken structure, we have a sponsorship zone created. In such cases, you can do away with this decisional point of interest and consider this. Price broke structure. We have the pullback to the upside. This is our inducement. If price fell to the downside, we're expecting to see a return to purge this and mitigate the zone before continuing bearish. But what we see is price further fell, gave us this pullback. This is a valid pullback because this is the last candle. This is the candle that created the swing low, and we can see how price went against it and took out the high. Price fell, swept the low. So this is our inducement. I don't want us to do entry today. The information will be too much on your head because this entry will be something we really treat very well because this will be the bedrock of you framing your executions. And then we're going to use a lot of examples to that, and then we'll just put everything together, a session where we just have a chat, a replay, analyzing together, top-down analysis. So I think let's just, since we've covered POI and other things that are relevant, let's just leave it here. You get